Let's get more on the White House reaction to the jobs report. Joining us is Council of Economic Advisors Chair Stephen Miran. You really think the Fed can cut 1 full point in this environment, Stephen? The market is going the other way.
Good morning, and thanks for having me. I mean, look, inflation is very well behaved. Core inflation in the last couple of prints was at the lowest level since March of 2021, right? So that's undid all of the Biden administration's inflation, and inflation's pretty well behaved. There's no evidence whatsoever of, incipient reemerging inflation threats. And I think that we do have to acknowledge that the president has a really good track record of being right on monetary policy. He was right in 2019, 2018, saying that inflation was not a threat. Consensus eventually came to his view. He was right in 2021 that inflation was going to reemerge, and consensus came to his view again. I think we have to acknowledge he's got a pretty good track record on this.
I think, Chair Miran, there's an argument for why the Fed should pay closer attention to moderation in jobs and in the overall economy. And I highlighted some of the weaker spots in the jobs report today. But and yes, inflation is behaving itself now, but most economists think we haven't really fully seen the impact of tariffs yet, whether it's retailers hoarding inventories or waiting on price increases, but that's coming. You see that all over the survey data.
I mean, you see it in some survey data, but the survey data tend to swing around based on sentiment, based on the stock market, and there's not really a good, a good correlation between what happens in survey data in recent history and what happens in hard economic data. That correlation has softened quite a bit. So what I would say is there's no evidence of it thus far. Perhaps it emerges, but there's no evidence thus far. And we did this experiment in 2018, 2019, and we saw that there was zero macroeconomic evidence of material increases in inflation whatsoever. Indeed, the Fed's core measure of inflation went down over that period.
Sure, it wasn't as widespread. I mean, this is 10% tariffs across the board with many trading partners. And just look at Lululemon. Look at all the retailers. They've lowered their profit guidance on this. They're either going to have to eat it in profit margins or pass it on to the consumer. We hear about price increases every day, but Chair Miran, let's stick with jobs. Are you getting concerned about what's underneath the surface here?
Look, I think it was a strong jobs report. I heard your commentary earlier. I think it was quite stronger than that. This is the third jobs day beat in a row, right? The third time the president beat expectations in a row. He's created over 500,000 jobs since he was inaugurated, and that's while cutting the federal workforce by 50,000 jobs, thanks to efforts to trim waste, fraud, and abuse. So I think this was pretty strong, and I think if you look under the surface, there's some really promising details. So all of the job gains since the president's inauguration were native-born Americans. All of them, right? And that contrasts to the last 2 years of a mirage of a strong labor market in which 2/3 of job gains went to foreign-born workers. That was because of the surge in immigration from the Biden administration. And everyone predicted all sorts of labor market doom when the president closed the border to protect Americans. But the opposite has happened.
But you can't argue that things are really, really strong and that the Fed needs to cut rates a full point.
Well, you can argue that the economy is normalizing to what it was before COVID and before the Biden administration's reckless stimulus levels. And if the economy is normalizing, then inflation is normalized, and other things could normalize also.
What else do you see in the data right now? Because it's been a little bit mixed. I mean, I agree. I think it's been more resilient than people thought, given some of the high levels of uncertainty and the sort of weaker consumer confidence numbers. But when you say normalizing, what do you expect for growth for the rest of the year?
Well, so it's hard to give a very precise forecast for growth because we have yet to see exactly how the tax bill shapes up between the reconciliation process between the House and the Senate, and we have yet to see exactly how the trade deals shape up as they will, I expect, continue to be made in coming weeks. So it's hard to give a precise forecast when the policy details are still being worked out. But I think that the economy is going to be pretty darn good. The combination of tax incentives for investment that are in the One Big Beautiful Bill to create an investment boom, tax incentives for increased labor supply, deregulation, cutting red tape, energy abundance, trade renegotiation, opening foreign markets to American products. This is an incredibly powerful economic policy combination.